candles and 22 black down candles for a net of 6 white up candles. 3 white candles occurred in the last 3 days. Although these candles were not big enough to create 3 white soldiers, the steady upward pattern is bullish. The post-game swing VIX, currently the market pulse is positive since it's trading above its signal line. The post-game crossed above the swing VIX 4 periods ago. The trend channel is up, so we have positive swing VIX, and this means that positive momentum is entering the market. We expect sideways to higher prices within the next 3 to 5 days. However, the swing VIX is above 29. This is where it usually forms resistance. The swing VIX usually forms resistance before the underlying security, and a buy or sell signal is generated when the swing VIX moves out of an overbought or oversold area, and the last signal was an overbought sell 13 periods ago. The swing VIX does not currently show any failure swings, and the security price has set a new 14-period high while the swing VIX has not. This is a bearish divergence. Since the swing VIX crosses moving average, the GDX Gold Miners ETF price has increased 5.76% and has ranged from a high of 51.54 to a low of 47.32. Market trend remains very bullish and pointing upward. It's trading above its long-term, intermediate, and short-term moving averages. In addition to that, we have here, according to volatility, we closed above the upper band by 15.5%. Although prices have broken the upper band and an upside breakout is possible, the most likely scenario for the current trading range that the GDX is in to continue, leaving us 36.56% narrower than normal. So we're going to remain neutral on this. Now, this was this was our commentary this morning based on Friday's close. As you can see here, when we pull up the intraday chart on the GDX, as you saw that disparity between the GLD and the GDX. So instead of breaking out further, we actually broke down. Okay, so this one we're going to have to wait and see. Those of you who've been following the Vulcan report, you probably want to go ahead and take some profit off the table and look for a re-entry on this one, because we don't know how far the pullback can go. The uptrend channel should remain intact, but based off of what we do today, I'll be doing an update tonight, and we'll see where we go from there. But right now, it does look like you want to probably take some money off the table on the GDX. All right, let's move forward. All right, going into bonds, the longer end of the yield curve, ticker symbol TLT, which is your 20 and 30 year bonds. As you can see, we have an inside day. We had a nice parabolic move on Friday's close, and then today we're trading inside that bar. So that is what we call an inside day, because we're inside the high and inside the low. If it was an inside low, that means we'd be breaking out of the high but remaining out, above the low, or an inside low would be, inside high would be breaking above this and then trading below here. So you have inside highs, inside lows, and then you also have narrow range inside days like what were occurring today, which means that a breakout above today's high and low tomorrow is highly possible and likely. Sometimes you can get these breakouts that occur after a narrow range day and a narrow range inside day like today, and it actually engulfs the prior candle, but it doesn't go anywhere. And a good example of that would be like right here. This here was a type of a tight narrow range type of a day, but not an inside day because it traded below, it broke out below the prior bar's low. But see, this day here, the following day, we actually traded below the high and the low of this prior bar here. So this right here is one of those engulfing bearish candles, letting you know that regardless what happens next, you're gonna go here. And as you can see, the following day it broke out, making you think, ooh, head fake, this market's strong, let me buy. And then you would have got in here and been really happy, and then you would have realized, hey, I got head fake, because then the next day, boom, huge gap down and a continued gap down. So those are things you got to keep an eye out for, because you just never know what could happen in these markets. All right, moving right along here.